Okay, welcome to our Smarter SMSF update for July 2023, where we take a look at each and every quarter what has been happening across the Smarter SMSF platform. And 1 July each year is a fairly big task internally for the team. There is, of course, document changes. There's changes across the platform when we think about the government changing the temporary minimum pensions, for example. We think about changes to the LRBA safe harbour, changes to things like ASIC fees and the like. Those things all have to be reflected so that you are ready to go and hitting the ground running as 1 July ticks over. So today is all about helping you to understand what has been going on within the platform over the past quarter, and more specifically with that 1 July change across the platform, across the documents and the like. We'll talk to you about some of the other things that we've been working on in recent times, and then a bit of a roadmap to take you forward as we move into the new year as well. So today, as I said, is all about giving you that information about what has been happening. So won't spend too much time here. On the agenda, you can see what we're going to be covering, but let's get stuck into what has been happening because it has been quite significant. So from a 1 July 2023 point of view, hopefully all of you would have received from us on the Monday following the new financial year kicking off our SMSF update in respect to the things that we made changes to on the platform. So I'm just going to click on this and we'll go there now to explain to you what those specific changes were. So you always have access to this. So this is our knowledge base, and within the knowledge base, you obviously have access to things like user guides. You can search over topics. If you want to look for things like the sample documents for the trust deed, you can naturally do all these sorts of things in here. So what I'm going to do is just work through this document with you to help understand some of these particular changes. Hopefully some of you have read this information already. If you haven't, again, you can go back and check out this at any point in time. So we do have a separate document that talks to the ASIC fee changes. So again, in here we have, because of inflation, we've seen a fairly substantial increase of about $38 in the ASIC fee that you can see year to year. Now, what that means is obviously that fee does impact both our members and those that order on a pay-as-you-go basis. So you can see that information that is included in here, and that has all been reflected, of course, in the company orders, whether you are a member and that member pricing would apply, or you are ordering on a pay-as-you-go basis as well. Just a little tip, because we do get asked on a semi-regular basis, the fact that we have people that go, well, even I'm a member, I still need to put in the credit card for certain document orders. So yes, that is true for company and corporations, and it will also apply for our ABN TFN registration. Why? Because the ASIC fee is relevant for company and corporations, but we also have a fee that we need to provide to our API partners in respect to delivering those documents to you. But you can go into my account and you can update or insert your credit card here and in essence store that information inside the system so that when you go to complete that order, you can utilize the stored credit card that is in here rather than having to re-key that each and every time. Okay, so just a little tip there. If you are thinking, oh, well, I've got to kind of insert the credit card each and every time, you can store that in here. And then obviously that will be applied to the scenarios. You still have to confirm that you wish to apply that. Otherwise, you can choose to use a different credit card if you want to. But just a little tip there in respect to that ordering process. So from the other point of view inside the companies, we have recently also included an opportunity for you to incorporate the director ID. It's not a compulsory field with the company incorporation, but it is a field that you can include as part of that application process. What we've also done is that we have added and made some changes to that company order form to add in 2 middle names, okay? Because what we do have by virtue of the API is you do have a 20-character limit in respect to the naming convention that can be used for each individual party or office holder or shareholder in here. So what we have the ability to do in here now is that we can see we have added not only the given name, but we now have 2 middle names and then the family name. So each of those allows for 20 characters. We have previously just had a given name or given names. So therefore, we've seen scenarios where people had 3 names, so first name and then 2 middle names, and the 20-character limit was insufficient. So we've gone now and added or expanded those out for you. And now you can incorporate as many of those as you want to, obviously to a limit of 2 middle names, of course, or the 20-character limit that would apply. So you can see in here, we also have that director ID as an option, and we've put in here some specific tooltips for you to help understand some of the information that would be relevant as part of that process. So those couple of changes have been added in, not only in respect to the company form itself, but we have also updated from a constitution point of view. We have also put in around the consents to act. We've put in some changes just to say that the individual, as part of their consent to become a director, has obtained their director ID. So again, we're not populating that, but there's just a consent and acknowledgement that they've done that, because the Corporations Act requires that director ID to have been obtained at least 1 day before they have been appointed as a director of a company. So we have made some changes in respect to both the company constitution and then the SMSF deed itself. So I might just quickly go in. These are not significant changes in the constitution, but the main one that I did want to touch on here was we did incorporate into this now the electronic signing measures that sit within the Corporations Act subsection 110A. Now, these laws only currently apply in limited circumstances. And what do I mean by that? The corporations law still only apply to the signing of documents in accordance with section 127(1) of the Corporations Act, which is about signing documents, deeds, for example, where we have a corporate trustee. So other aspects of signing documents where required under the Corporations Act can still only currently be done by wet ink. Now that is before the Senate. I've spoken about that through our Changing Face of SMSF events. So you do need to be conscious of what can and can't be signed, both in the context of the Constitution, but also in the context of your SMSF deeds as well. So we've added this information inside of the deed. And again, we've also added some I might just go and find this, technology neutral, or signing, it's probably the right word I want. Why is that not wanting to find it? Make sure I've got the right version, it'd help. Okay, I will come back to that one because I just want to make sure I've got the right version here. Actually, I can check that up at the very beginning. Yeah, so it is the right one. I'll make sure I'll send links out after this. I've just totally had a blank here where where we've inserted that into the requirements. Obviously, rule about the powers of directors, and that is where we've made the changes to or the requirements for the director ID that we've added into there as well. The other thing that is worth noting is we have also, as part of the fixes recently to our company and corporations orders. So I might just quickly duck back to our slides and just talk you through this, given it is relevant right now, is that we have had some fairly substantial API changes from the 1st of July and even prior to, so going back to February. So one of the things that we have had with a number of our members is some challenges in terms of the company orders coming through. So we are still working with our API provider InfoTrack about these, but what we have done, and you may have seen this recently, is we are not merging these documents at the moment. Whether we keep this separate, we would be more than welcome to get your feedback, but you can see here what you're doing is you're getting your Form 201, which is around the application for the company. You'll get your ancillary documents, so your applications and minutes and so forth. You'll get your constitution. You'll get your signing page as a separate document, because effectively you don't need a signing page with those rules. And then you'll get your ASIC certificate of incorporation. So that at the moment, typically you'd get that all as a single merge file. We are issuing those companies as a single, as individual documents, I should say, rather than single at this point in time. So again, just be aware of that. If you find that that is actually a better outcome, let us know. And even you can put it in the chat here and so forth. But that is currently what we're doing whilst we work through some of those bug fixes and stuff with the API changes that we've had in recent times. So let's go back to the other updates that we saw in here. And I'm going to go back into our updates and go back specifically to our new SMSF changes. So we have made a change to the deed itself, but there are a couple of other changes that we have incorporated into this process. And I'm going to go into our fund establishment now, because one of the things that you have when you do your order is you can choose whether it was a fund that needed to qualify for QROPS, so as a qualified registered overseas pension scheme, and therefore previously you had an option to choose either the resolutions that we initially created as a special rule of the fund, but then ultimately we've created a deed thereafter. So we've taken the opportunity here to remove the resolutions out of this process. So the questions you'll now see in here are simply, is this a QROPS deed, yes or no? What we'd had up until 1 July was it yes or no? And did you want to produce the deed or the resolution? So we've removed that from the process now. The other thing that we've done is historically with our new form, and this was the same with our trust deed, is we didn't really have a chairperson. So it inferred that the first party that you're adding in here was going to be the chairperson. So very simply, we've done that process now. So once you add those members in here, so if I just add myself, need a tax file number, address, and then what you'll see is once we add the other party in, Joe logs, you'll then also see that we have the ability to now choose who we want to be the chairperson. So that's naturally going to populate the information that we now want to have as the person that would sign, whereas previously that was defaulting as me as being the first member that was added into that process. So little things, but important. The other thing that we've done here is we have also now given you the choice when you set up the fund as to whether you want to produce the binding or non-binding death benefit templates, or whether maybe you're going to go off and do that work separately. So we asked the question here, do you wish to prepare DBNs for the members? Yes or no? If it's no, then we're not going to produce that documentation as part of the completed order. Okay, if you choose yes, you can then select either non-binding or binding or both. So if you're not sure which ones, just select both and it will do what we've been doing previously up until 30 June, and then the client can determine which way they want to go about producing those binding death benefit nominations. Okay, so again, a couple of shifts that we've done there just to streamline the process based upon the information that may or may not needed to be requested. And then, of course, what we have done is in more recent times, as part of the completed orders process, we have now included what we call a workflow around the new fund establishment. And again, I might sort of go backwards and forwards with the slides and where we're at with these different screens. Is what you can see as we go down to a couple of slides here, is we've been spending a lot of time on these document flows, and I'll come back to why we're doing this shortly. But what we've now created in here is once you've done a company order, you're going to be able to take that information from the company order, and you're now going to be able to use that to populate your new fund order. And once you've done your new fund order, you're going to be able to take the data from that new fund order, which has also incorporated the stuff from the company order, and it's going to populate your ABN TFN order as well. So we're seeing, having spoken to members that are now using this, a saving of at least 20 minutes, potentially half an hour, to the standalone process that was being applied previously with a company incorporation needing to be done, then rekeying some of that as part of the fund establishment process, and then going on to the ABR site and having to do that using, I guess, rekeyed information in its entirety as well. So things like associate contacts and that sort of stuff takes a lot of time through the ABR process, where this is all pre-populating in its entirety. And the advantage of this is that you can then obviously push data into your various softwares. When we think about companies, we think about new funds. And then once the ABN is done, you also have an ability to push that ABN, once it's been issued, back into your software as well. Okay, so there's a huge advantage that's being gained from members that are now using this to take advantage of it. And what we've done, because a couple of times, either myself or David have spoken to some members, we're checking those that have done new SMSF orders, and they're saying, I just totally forgot about it. So I'm so busy with what's going on, I just forgot that it was there. So what we've now done is when you've done your new SMSF order, you will see an additional email that goes out, and it just says, just a reminder, this is where it is. We've created a user guide for you. Go and have a look at it and understand how this works. And in the user guide, so again, if I just shoot up here and I type in ABN, you will be able to look at and watch the process of the entire ABN TFN. So you can see here end to end how you can go through that approach and the information that it is populating as part of this process, saving a significant amount of time, not only in terms of the associated contact records, but also you or your business as the authorized contract. We're storing that information so you're not having to rekey that each and every time after you've done that first order. And you can see obviously the disclosure questions, the declaration, and then this response message that we get for you that issues the ABN. You can go and check it on the ABN lookup immediately, and you'll have a reference number and stuff. So we'll go back and talk about that a little bit later, but that is a fairly substantial shift that we've done, obviously, to assist in this fund establishment process. In terms of other areas, we have, in terms of the deed upgrade, we've done a similar thing in terms of that chairperson that we touched on before. But I did want to say that over the course of the next month, we will be bringing on a new SMSF deed upgrade form. It does include things like additional parties that will deal with employer sponsors, principals, founders, participating employers, and so forth. Some of you have used it because you've had this issue in the past that we've needed to do that. And in particular, you've required us at Smarter SMSF to remove those parties potentially as well. So we've given you access to that form. So we've kind of been getting some testing done along the way there. We've got a bit of integration work to do, and then we'll be looking to release that as well. In terms of other form things that were spoken about, in terms of the pensions, you will know that the temporary 50% reduced minimum pension has ceased from the 1st of July 2023. So what we've done now in terms of documentation is we know that we still do have some clients that we need to produce documents that predate 1 July 2023. So based upon that commencement date, it will either apply the reduced minimum or it will deal with the current minimum as the laws allow for ordinarily. So we have also created some conditional logic in the templates so that if the 50% temporary minimum applies, so you're still doing older documents, we will incorporate some of that text into the generated documents off the back of that as well. And it should be noted that we do have both our pre-existing form, so our form for pension commencements that we've had forever and a day, but we also have our pension commencement documentation that includes you being able to start pensions with an unknown balance. So our new form, we're still working with a number of clients to make sure we've got all this working seamlessly at the moment. But this additional pension document now will enable you to choose to start the pension with a known balance or an unknown balance. Okay, so if you want to go through a two-step process, you can now utilize this document to actually help go through that process. And the most important part to this, and I might see if I've got a saved order that I can go back to in here, is that if you create a pension commencement with an unknown balance, we will automatically create a saved order for you for that next step. And what I mean by that is that it will allow you to then not have to re-key in once you've confirmed the balances inside the SMSF upon completion of the accounts. So in here, we've done a couple of really smart things. So we've captured all the information that you can see in here. And then when we get to the question around whether the pension balance is now known, we have also created a refresh button. And that refresh button in here, so will allow you to connect to your integration, and then it will enable you to then from there. So whichever one, I don't know whether I am connected or not, but I better go back and check that. It's going to enable you to go in and refresh the data for that fund, because naturally, when it was a saved order, we didn't know what that information was originally. And therefore, that information will populate in and you'll get all your detail in respect to the pension obligation for that particular year. So again, a couple of smarts that we've put into this form, including the fact that you can do the above minimum pension election as part of this ordering process as well. So again, here, if we got it on the 1st of July 2023, then the calculation of the pension is going to display the full year rather than the part year, the full year's calculation rather than the 50% temporary minimum calculation as well. So in terms of other changes in here, we do have a number of LRBA documents that talk to the LRBA safe harbour. Now, we do know that the safe harbour interest rate, which is linked to the RBA's standard home loan investor rate. So that has moved from 5.35% to 8.85%. So that, I've just realized that number should be slightly higher, so I'll get that updated straight away. But inside our LRBA loan facility agreement document, we do ask the question about whether you are complying with the LRBA safe harbour or not. And on the basis that you are applying the LRBA safe harbour, it will pre-populate all of that information in respect to the interest rate and making sure those other terms and conditions are obviously in there as well. So that would sit under the lender bit, and then there's a calculator if you haven't got that calculation already there. Doesn't populate into the document, but it's a tool that you can use as part of that process. I'm not going to spend time going into that at this point in time, but just to let you know that that is there. And also, I do note that we have also updated our templates for our notice for a variation to the interest rate. So with many of our clients that have related party loans, you can see there is a notice to vary the interest rate, something that you might want to do very quickly. You've got a related party, you just want to document that, make sure the trustees acknowledge that there has been changes to the conditions of that loan, and away you go. So documenting these parts are really important, and given that we've had such a material move from the 5.35 to the 8.85%, means that you should make sure that you are doing the appropriate documentation and changes to the cash flow in the fund and potentially the investment strategy that sits off the back of that as well. So they're the form-based things that we've been working on, like I said, over this past probably 3 or 4 weeks, dealing with and getting ready for these 1 July changes. We have also, as I said, made changes in the documents. So the company constitution, as I said before, there it is. That was where I was looking for. So sub rule 2.8 incorporates now the technology neutrality provisions in section 110A of the Corporations Act. Okay, so we've also applied that not only to our company form, so our company constitution, and also our special purpose company constitution, but we have also applied it to our company constitution only. So we do have some clients that do their incorporation or ASIC registration piece through CAS 360, and then all they need to do is actually get the constitution. So they go through and complete that task through here. But equally, where you're making a change to the constitution, either special purpose or standard company, and you need that 75% resolution to be able to pass and then update that constitution, in essence, we've updated those as part of the process as well. Now, let's move into our new SMSF and the changes that were made here, because there are a couple of important things that we've done. And we create a change log each and every time that we make any change to the deed. Okay, so if you ever want to know what is happening in the deed, we're naturally going to let you know through these sort of events and other things that we might write and communicate with you. But you can go back and always just search up the change log, and you'll see the change log is something that we do for the purposes of the foundations course, for the deed, and for other things that we obviously work on a regular basis that is core to the platform. And you can go back and you can see a myriad of changes that we've made going back to 2017 here. So our deed that was September 17, and then you can see the sort of the year-on-year bits and pieces that have been done. So I'm going to focus here simply on changes that obviously we've made from 1 July 2023. So the first thing, we've just made a slight adjustment in the first rule around just the interpretation of him or her, or someone who is obviously gender neutral in that respect. But most importantly, we've done 2 key changes. So the first, I'm going to go down to Rule 30. And Rule 30 is, if we look at our deed, I'm going to go and now bring up our new SMSF. And we'll go to our fund establishment sample document here. And you can see in here, when I go to Rule 30, I'll just bring this up on the screen. So what we've now done is we have inserted a signing of documents clause. So in essence, what we wanted to make abundantly clear is we know that we have these technology neutrality laws coming in and intending to apply to self-managed super funds. At the moment, as I touched on earlier, we know that there is a limitation as to how and when we can sign documents in an electronic form. So deeds, yes, they are allowed to be signed that way. Where we have a corporate trustee, individual trustees, you're going to need to look at your state-based laws. There are specific exclusions within the SIS Act. There are some things that can be included, such as the signing of financial statements. So the Electronic Transactions Act ordinarily applies unless there is an exception in the law. And we do have an exception to the Corporations Act and the SIS Act and SIS regulations at this point in time. However, where there are certain elements that are prescribed by the deed, well, then obviously we are guided by what the deed says. So what we've been doing is we've now inserted, to be quite clear here, that the Electronic Transactions Act, and we've got our guide to help understand how this works, to ensure that technology neutrality applies to the various laws so that if a document or other communication was to be conducted this way, it would not be invalid by doing so. However, we need to be conscious that there may be those that are exempted by regulations that may limit the ability to do so. Okay, so all we're now doing is really applying that universal model that we see within the Corporations Act to apply in essence to this process. Okay, so we can do things where the deed allows us to, such as pension documents, even arguably to the extent death benefit nominations, because Hill and Zuda makes very clear that what the deed says is the way in which that could occur. Now, the caveat on that is, of course, that where it needs to be witnessed, there are different witnessing laws in the various states. So whilst it may be quite simple in its application to do, you do need to be aware of the other things. So it may therefore simply be beneficial to move to that default position of wet ink. But we have specifically now included some provisions in respect to the technology neutrality laws around the signing of documentation. And we won't need to make changes to this as the laws change, because in essence, we've put it in a way in which it will continue to comply with the superannuation laws, which is a definition inside the deed, which covers things like the SIS Act, SIS Regulations, Corporations Act, Income Tax Assessment Act, and the like. So it is a defined term, if I get there eventually, that in essence will ensure that we won't need to make any further changes to that as we go along. So you can see there the superannuation laws in terms of what it covers, and therefore the alterations to those laws as and when they may occur. So I'm going to just move back out of that and move back to the changelog, because the other thing that we have done in here is off the back of a whole range of case law. This really is the build-up of what we saw in the prelude to the Hill and Zuda decision, and then also in more recent times, in particular thinking about Williams and Williams. A lot of this is about making sure how is this notice of direction for death benefits going to be binding and valid on the trustees to pay in accordance with the members' wishes. And we've seen across a number of cases this concept of, does it need to be accepted? Does it need to be served? Who does it need to be served on? How many people does it need to be served on? Does it need to be given up front? Can it be given at a later point in time? So it looks a bit more like other testamentary documents. So it's a range of these factors that we've seen on a continual basis that got both Chris Hill and myself thinking and revisiting this particular rule. So what we've done is in 11.1, we've updated that to make it clear that a written direction may be provided to the trustee to accept the different forms of nomination. Okay, so I'm going to move us back up to rule 11.1, just to explain this in a little bit more detail. And obviously, we've updated the guide in here as well. And what we can see is in 11.1, we have added into here, just move this across, a member and only a member may provide a written direction to the trustee to accept any form. Okay, so there's a slight tweaking there about the fact that a written direction can be provided in any of these forms that would ultimately be accepted. Now, what we have then done is we have included a new 11.2. And what 11.2 says is the written direction provided by this rule above may be provided by the to the trustee during the lifetime of the member or upon their death. Okay, so let's just go back to the changelog to help explain this. So what we're doing here is we're allowing the member to choose the timing of when that written direction is done. So when they've done it, let's say they do it today, it could be a binding nomination, a non-binding, or an SMSF will. They can either provide it immediately, in 2, 3, 4, 5 months, in 2, 3, 4, 5 years whilst they're alive, or following after their death by another person. So why is that important? It's important because there may be situations whereby someone has a specific set of instructions that they don't want other parties to the fund to know, i.e. they're also a director, they're also a trustee, and the fact that if they had to have that served on the trustee or accepted by the trustee, it is going to create friction. So therefore, they're going to hold that like they would with their will and with their other testamentary documents, and therefore say, this is now being served upon the trustee and by that other person. It may be the executor, it may be some other form of representative for them, and then say, you are bound by this instruction. This is what has been provided by that individual at that point in time. Now, in here, we have also ensured that that change says, well, we can't just have a never-ending piece of string that says, well, we've got to pay out a death benefit, but we don't know whether someone's going to serve notice on them by this person because we don't have any written direction for them. So we've put in here a 6-month time frame to limit that point in time in which that direction by that member could ultimately be served to the trustee. And what that means is if it is kind of in a bottom drawer and the death benefits are being paid out, and then 2 years later they go, oh, geez, look what we've found, and it hasn't been paid in accordance with the wishes of what that binding nomination, not even wishes, what the directions of that binding nomination would have inferred, well, in essence, that has become null and void, because if it's not provided within the 6-month time period following the date of death of the member, the trustee may treat that member as having died without making that written direction. And that's important because what we then need to do is we need to ensure that any death benefit nomination that has been done also reflects that approach. So you can see in here, so where it has not been provided within the 6-month time limit following the date of death to produce the nomination, where it's been reached, they're in essence deemed to have been done. This is designed to avoid any future objection where such a document may have been found at a later stage and the trustee has potentially paid out the benefits. So what we've then done is if we go down to the sample of our binding nomination, so both in respect to the non-binding, but I'll probably go to the binding as a more relevant one here to be looking at. So what we have now done in here is it's included an additional piece. So we have the same things in the template, and then in the BDBN order, there's obviously these things that you can customize to develop that binding death benefit nomination. But we have a separate section in here that this written direction may be provided to the trustee during my lifetime or after my death. And I acknowledge that where this binding death benefit nomination is provided after my death, it must be provided to the trustee within 6 months of my date of death. Otherwise, the trustee will not be bound by this nomination. So there is an acknowledgement by the member who might not want to be issuing this to say that if it's not produced within that period of time, ultimately it will become null and void. Now, one of the other things, just off the back of one of our members making this suggestion, is because these need to be witnessed, witnesses need to be over the age of 18. We've just put in there a date of birth that you can put, you can include, that just helps to sort of do that check and balance to make sure that that person that has signed it obviously is valid and eligible to do so as well. So those are pretty important changes that we've done off the back of some of those recent decisions. Like I said, the Hill and Zuda, of course, but then also the Williams and Williams one that we saw recently as well. I might just shoot back up to Rule 11 just to finish this off so that you understand, I guess, the full context of it. So we obviously go into that time frame there. The fact that you can have a representative appointed. Then we also obviously look at the specific provisions around the written direction, and the fact that if it has been done and done properly, ultimately the trustees don't need for it to be served. Obviously, until that point, or once it is served, I should say, whether it is during the lifetime of that member or after death, ultimately it is accepted as such, okay? And then there are other requirements where the fund would not, or the trustee would not be obliged to accept that nomination. And those circumstances would only be where it would be invalid, or potentially if it is invalid in part, the trustee has the ability to accept those parts which are valid as well. So again, I would suggest just taking the time to going through and understanding that particular change around Rule 11 and I guess the rationale as to why we've done it. And that now really, in my view, lines itself up with many of the decisions that we've been seeing in recent times. Like I said, also inclusive of that Hill and Zuda decision, because as we know, we do not need to comply with the requirements in 59(1)A and 617A unless the deed tells us to do so. So our rule is very clear, okay? The other thing I should say in here is our Rule 11 is very clear. We must follow, for a binding death benefit nomination, the format that is provided in Schedule 2. We must follow, for a non-binding nomination, the format that is provided in Schedule 1. Okay, so there's no, we've had other solicitors and stuff come back to us and questioning whether these things can be cascading to different beneficiaries and the like. Our Sample 1 and Sample, our Appendix 1 and Appendix 2 are very clear. Okay, so you can see in here, these are the Schedule 1, and it goes through, this is the form. This is the acceptable form. This is Schedule 2. This is the acceptable form for a binding death benefit nomination. Okay, so we are following, obviously, these laws very closely, and naturally, we've updated our PDS to reflect a lot of these changes as well, which I should say, and naturally, the caps and the detail at the back here reflect that information as well. Now, I should also say, whilst I'm on this topic of the deed, we have also reflected that change in the deed upgrade too. Okay, so in the deed upgrade, what we have done in here is we have made sure that the member notices, so not only the PDS and the upgrade deed itself has been updated, but we have also put into the ancillary documents at the back of this form. I'll go right down to the bottom. Those member notices, we've also incorporated some of that information around why these deed updates have been done. So you can see in here, these do look slightly different. We've tidied up some of the references, but we've included the signing of documents as part of this process, updated the minutes and so forth as well. You can see that chairperson sitting there with what I spoke about earlier, and the nominations and so forth as well. So that hopefully gives you a fairly comprehensive update to what we've done with the deed, why we've done that. You can always go back to the change log and see that information as to why we've done it. We'll put some detail into a sample letter. So you might have seen in here when I typed in deed upgrade, we do have a upgrade letter that you can utilize for your clients. We haven't made a change, but we can make a change for that as well for you if you want to go through and look at doing deed upgrades. We had a range of clients that were looking to do these on the 30th of June. We told you, hold off, hold off, hold off. Many of you took our advice, and then we've seen those orders obviously come through from the 1st of July, taking advantage of obviously those couple of changes as well. So let's kick back to our slides. I know I've been sort of jumping backwards and forwards, but really important to help you to understand what we've done and why we've done it in that respect. So we've covered the updates, we've covered the API and the ASIC changes, the deed changes. We have made changes also, obviously, with some of our PAYG documents going up. I showed you our changes to the incorporations. The other thing that we've done for our members, that those that have the subscriptions, is we've also made a small tweak in the user portal for the completed orders to be able to view and download. So what we have in our user reporting, for those of you that have a subscription, and you've got multiple staff being able to access that subscription. You can see in here as a workflow, I can, as the parent or the primary person here, and there can be more than one, I should say that, is I can go in and I can see David's orders and I can open that link and in essence complete that order myself. But equally, I might be in a situation where David has completed a recent order, but David's now on leave and I have a client coming in 2 hours that I need to get access to that document. So the parent or the primary account holder here can go in and they will be able to access that completed order themselves from the completed orders page. Okay, so they'll be able to go in and you'll see that should have actually had a completed before. That should actually have a completed orders link. I don't know why that's not on here. Maybe it's cached in my browser, but you'll be able to, this will be a download and you'll be able to access that document from there. So using a different computer, that's totally very weird. But anyway, you'll have to just take my judgment that that's exactly what you will be able to see. And if you don't see it, let me know because it should be there. Anyway, we will keep moving on. In terms of other things, in terms of what we're doing in the enhancements, let me go to the next page. So as I said, our ABN stuff is all up, live, running. So the feedback has been extremely positive, as I said before. We've also got the ABN TFN inside Simple Fund 360. So if you're ordering through there, you can do that as well. I've just given you a document there. That's what we provide you as part of the generated order. So we call it our ABN integration response. So it will give you the ABN, it will give you the name, it will give you the status, it'll give you the data registration, and will give you the document number or reference number if you have to follow up with the ATO as well. And as I touched on before, you will be able to post that straight back into your SMSF software. If you get an error message and stuff, you'll be able to reissue and we'll give you a response as to what that error was as well. I touched upon our pensions earlier as well, so I won't really delve into that much. The bug fixes, like I said, we've been working on these with our companies. That's been the biggest bugbear, pardon the pun, at this point in time. So we are and have addressed some of those. We are going through and revising our internal process with our counters at the moment. So we're sort of tracking those offline. So if they don't look right in your system, we are working through that at the moment, but we have a full reconciliation sort of in the background. That's been part of the process of migrating them from the, I guess, the person that does the subscription up to the entity, the firm that is holding that for all the staff. And I touched on before the document templates and the chairpersons that we've added into some of those. Spoken about that one as well. I've also spoken about the DocFlows, and I might go back to this in a second because this is going to become a key part of what you're going to see on the platform over the course of the next few months and obviously going forward. One of the challenges with consolidated forms, so the fact that we go, Aaron, I'd love a new SMSF and a company form to be put together. I'd love a company form and an LRBA put together, and I'd love a deed upgrade form with a change of trustee form and a company form. So the build and the load is quite significant, having to sort of construct all these things together. So yes, we recognize that having a single form is great because it would reduce the time of things that would need to be duplicated. Fund name, who the trustees are, addresses, and that sort of stuff. But the reality is it's significant in terms of build time. There's huge amounts of combinations, and the more templates we have, obviously there's speed issues that sit around that. So what we've decided to do, and you're only starting to see the first iteration in this process, is we're creating what we're calling DocFlows. And this is the fact that we want to flow data from form to form to form so that we're overcoming the time challenges of duplication. Okay, so it allows us to get these things to you faster. It provides more flexibility in us to create the different document combinations. And ultimately, we want to get to a point where you can choose your own adventure because we'll have the API sending the data wherever you want to. So we will create our own strategy combinations in the DocFlows, but then allow you to create your own as well. And ideally, because we have firms that have multiple staff, you will be able to task those between the members as well. Okay, so yes, the negative is it's not a single form, and you're going to get multiple orders, but we believe we overcome that through the DocFlow process. Okay, so these are the things, I guess, the functionality that we're wanting to do and what we have done within the new fund establishment process already. Okay, so we're obviously with the API, with the company, we're getting the validation, we're getting the submission to ASIC, we're getting the ABN, we can post it to CAS, we can get a new DocFlow, we can get a DocFlow that moves that data to the new SMSF. We can then use that data to populate the fund. We can then update our software, and then we can get that data and we can post it to the ABN form. And then once we've got our ABN, we can post that data back into our software as well. So if I just go back to our forms, and I might move back into our completed orders page. Actually, I need to be here. What we're going to be able to see, close that one, is the fact that where we have a company order now, under the completed orders, you will ordinarily, I'm sure most of you are relying upon the email that turns up. Okay, so you're relying upon the email for the delivery of and downloading the documents, not necessarily going into the completed orders page. But what you will see is if you do come in here once you've got that email, and the next step you're going to be doing is going to be that new SMSF order, you can see in here that there is the create new SMSF. And what that's going to do is it's now going to move the data that it knows from that company order, because you're going to be creating that as a corporate trustee. It's now going to go in and populate the information that it knows about that corporate trustee and about who those particular members are that completed that company incorporation in the first instance. And then if we go to our new SMSF, so if I go back and just type new SMSF, because we did go down the path of trying to consolidate, as you can probably see there with some of those test orders. But ultimately, in a similar vein, once we've got our new SMSF, we can apply for our ABN TFN, okay? And from there, again, we're capturing all the information from that form, which captured the information from the company form, to enable us to go through and complete this particular form. And we're hiding a lot of the form fields that we know the answers to already. So we know it's a self-managed fund. So the checks that we need to determine and validate that it's an SMSF, they're all hidden in here, and we are passing those automatically through. Okay, so you can see in here all this information. We've got tooltips that explain these bits and pieces, the postal address, some of this stuff we don't know. Of course, we've got our different ESAs that we would need to incorporate as part of this process. If you're doing this through BGL, naturally, the only alias it's going to show is the one for BGL. But we've got all the different questions around contact details, associate details, and the like. So I'm not going to go through this through our integrations week. I might just quickly open that page up. We did spend a week going through all of our integrations on the Smarter SMSF website. So we do have here webinars around the fund establishment process, go through that quite extensively, the BGL integration, the class integration, and the SuperMate integration as well. So you can have a look at that and get yourself up to speed with those particular issues. But that document flow is going to play a fairly substantial role as we move ahead into this new year as well. So let's move back to our slides, and we're pretty close to wrapping up for today and talk to you about really what's ahead. So we are, as I said, seeing and looking to continue to add things into our user orders and our console. So the reporting, you being able to control what staff you want to add, remove, and the like. Our DocFlows, as I've just touched on, is going to become a core part of what we're doing as well. We are, and we know, and has been for some time, the fact that our platform's kind of 6 or 7 years old now, we are building out at the moment what we're calling our Docs 2.0 platform. We've been talking about it for a little while, kind of backwards and forwards on things, but we will have a beta mode by the end of September for at least what we see as our most popular documents. So 5 or 6 of those. So you'll be able to toggle between the app and the Docs platform, the new version, and you'll be able to go in and do your new SMSF orders, your pension documents, your deed upgrades, the things that we know that get used 80% of the time on our platform, getting people to give us feedback on those, in particular our members, making sure we're meeting, I guess, the expectations and the improvements and enhancements that you're after. Most importantly, the integration is going to be embedded at the top of those forms. So you'll be able to connect your integration inside that form, class BGL SuperMate, and then it'll populate the data as part of that process. Same goes with our deed platform. We are going through and just talking to a number of people at the moment about the beta testing of that process. We are moving it from just an automated service into an entire sort of doc management process for your funds, what I call a fund-centric approach. The fact that you can not only manage your deeds there, you'd be able to manage constitutions. Ultimately, there'll be other areas you'd be able to manage, toggle on to automate and upgrade those deeds on an ongoing basis, and potentially even be able to do bulk deed upgrades where we need people to be able to have that sort of manual intervention as well. So we're naturally going to be continuing to expand the document suite and our foundations course with Tim obviously having come on board. There's a number of things that we're working on at the moment that we're really excited to be sharing. Not only having one course, but probably by very early next year, we will end up with 3. So we've got an upcoming webinar on that. I suggest that if you want to find out more about that, join us for that webinar at the end of this month. Final reminder, we have been nominated in 2 categories this year for the SMSF Advisor Award. So we'd love for you just to spend a little bit of time, please, to acknowledge us and your other SMSF service providers that you work with, both for us, SMSF document provider and education provider. Voting is currently open, closes on Friday, the 21st of July. So we'd love for you to give us the support. That would be very much appreciated. So that is it. Thank you. We do have a number of events coming up that you can see on the screen here from a product demo point of view. We are having a masterclass in the end of August, which we'll be sharing some more information shortly on, both Tim and myself. That is one of the changes you'll see in the CPD program for this year as well, is the addition of some masterclasses replacing some of our monthly webinars, giving you more in-depth, more tools that you can take away from those events as part of your CPD subscription. But you can see there a range of events that we have coming up, both in terms of the product demos, and will also be at all of the BGL RegTech events right around Australia. So if you do have any questions, please feel free to ask those now. Other than that, you can get in contact with us through the normal channels. Thank you for being a part of today's session. Hopefully it's given you a lot of insights into the great work that the team has done, not only over the past quarter, but getting ready for the 1st of July. I hope you have a great financial year ahead. Plenty of challenges, plenty of issues that we need to be addressing in the SMSF sector, but hopefully we can help you navigate those successfully throughout 2023, 2024. Have a great rest of the day. Speak soon. Bye for now.